GDP growth for Africa in 2011 was 5%, and the International Monetary Fund expects it to remain constant in 2012, despite the Eurozone crisis, that is. The Investec Africa Fund is buying into the Africa growth story. And for more, the co-portfolio manager, Joseph Rohm, joins us from Cape Town. Joseph, are you extremely excited about the African continent and potential growth for investors and players in terms of companies on the continent alike?
So Africa is in a very good space. The growth, as you say, is very well documented. So as a region, it's growing much faster than most other parts of the world. And I think what's interesting is this is quite diverse across Africa. So there was a study done recently, and 7 of the 10 fastest growing economies globally were in Africa. And as you say, that's expected to continue, but it's very diverse growth. These are not just countries growing on the back of commodities. A lot of that is service driven as well. So that growth, absolutely, we're very positive about. I think what is less well documented is this is a time when we're very concerned in the developed world about the levels of debt and leverage, and Africa is very underlevered, so it has a lot of room to fund this growth as well. It has a lot of room for sovereigns, corporates, and even at a company level to take on a lot more debt. So that's very encouraging. Also, Africa is very underpenetrated. So, in South Africa, we have very high levels of debt to GDP. In countries like Nigeria, that's very low. Countries like Kenya, that's closer to 20-30%. So there's a lot of room for growth at a product level as well. And then Africa, as you know, these aren't easy markets, so barriers to entry are very high. So companies, once you're in there, once you're set up, you can price very aggressively, volumes can grow, and we're seeing companies generate very high levels of profitability as a result. So I think for a multitude of reasons, it's a very interesting and attractive story at the moment.
Joseph, when you look at Africa now, if I can just start off with maybe a few longer term, long cycle issues. I mean, everyone now thinks about consumer growth in Africa and resource growth, and China needing all of the stuff that's in the ground in Africa. But I've got a little theme, as long as Chinese growth continues, over the next decade or two, they will obviously swap more to consumer-led growth out of China rather than fixed investment, and that essentially means food. And I think one of the big futures in Africa is actually food, simply because we've got the largest area of land available for agricultural use in the world. What's your view on that? And is this one of these really long-term 20-year stories, or do you think it might happen sooner than that?
So a couple of things to say there, and again, just to emphasize, Africa is not just a resources play, and I'll come on to the agriculture, but outside of the oil exporters, so Nigeria and Angola, these are very diversified economies, so driven by services growth, and as you say, China's slowing, but it's still growing at a very healthy 7% annually. So we do see continued demand for resources in any case. And if resources prices were to come off significantly, we still feel that the more commodity dependent countries would perform well because their budgets are balanced at oil prices significantly lower than where oil prices are today. But your question was more on agriculture. Agriculture is more difficult to access as an investor. Africa has 15% of the world's space, but there are very few public listed agriculture players in Africa. So it is a theme which we do access in the fund and which we would like more exposure to, because I agree with your sentiment. I think it's going to be a theme which will grow and grow, but it's a long-term theme. It's a slow burn, and as I say, it's very difficult to get access to that. But we do have companies within the portfolio which are primarily agricultural plays. but not many, and we would like more. But certainly I expect to see a lot of growth there over time.
Now, Joseph, when you look at Africa and the markets outside of South Africa, I mean, effectively there's only maybe 4 markets where you can get any real volume and any real liquidity in the market. So 2 questions spinning off from that. How big can all of these Africa funds get simply because of the liquidity? And on the liquidity, what sort of, I mean, it's difficult to predict anything, but what sort of excess return would you expect out of an Africa fund to get some sort of compensation for liquidity and risk? I mean, we all know the Arab Spring, we all know what's happened in Nigeria, you know, sporadically. What excess return would you get, and how do you cope with the liquidity?
So liquidity is probably one of the questions we get asked most, and I think there are 2 sides to that. I think it is a constraint to investing in Africa, but equally liquidity is significantly down from where it was 3-4 years ago. And equally, I think that's the opportunity. You know, we see liquidity improving again. As you mentioned, some of these markets stabilize, Egypt being one of them. Over time, we see big growth in capital markets in Africa. So we expect liquidity to improve. We expect trading volumes to pick up. The IPO market, I think, will take time. We don't expect much IPO activity over the next 2-3 years. But I think if you combine what we expect to be a much improved outlook in liquidity over the next 3 to 5 years, with the fact that these markets are so attractively valued, you know, most of the stocks that we're investing in are trading on single-digit PEs with very high levels of earnings growth. And that's continued, you know, that's been consistent through the global financial crisis.
Joseph, I'm going to throw a couple, I just want to interject
Sure.
here and throw a couple of countries at you to drill down into the hotspots that you perceive to be out there. And if we throw in Nigeria, we throw in Ghana, Angola, Mozambique, potentially in the East African space. Ethiopia, even, given that we recently had the World Economic Forum being hosted out of that territory. Are these the territories that you're playing in? Am I leaving out some hotspots?
So I'd say there's sort of 3 big geographical themes that are really interesting at the moment. You know, some of those countries you mentioned are particularly interesting in East Africa because there have been significant oil and gas finds in East Africa recently. Uganda's oil finds are very well documented, but more recently in Kenya. And Kenya's oil, you know, over a medium term should transform its economy. And then gas in Mozambique and Tanzania there have been significant finds on a global scale. So oil and gas, and we have exposure to East African oil and gas finds in the portfolio. So yes, we do have exposure to a lot of those countries, either within the local stock markets or through global exchanges where these companies are listed. You asked about Nigeria as well. You know, Nigeria is a country we've been traveling to for many, many years. And every time we go, we're impressed by what are incremental changes, albeit they small, but reform has continued in Nigeria. You know, one of the reforms that's talked about, very well documented, is the banking reform. We've got a very hard-fisted central bank governor who's come in, who's really shaken the banking environment. You know, we'd say you still have to pick your stocks very, very carefully. But again, these are banking stocks that are trading, a lot of them well below book, delivering earnings growth of 20%. And these are banks that have sold their non-performing loans to the asset management company of Nigeria. So we think, you know, within Nigeria, a sector like that is a lot better placed, looking a lot more interesting. So,
and Joseph, you can't ignore the consumer when it comes to the African continent. And there you're looking at themes like retail, also branded products going up in territory, home care products I've heard being bandied about. Ignore the African consumer at your peril. Would that be an apt way to put it?
The consumer is one of the key themes in Africa. Again, it's one of the key themes that we access in the fund. A number of interesting companies across Africa. Disposable income is growing. The middle class is growing. The demographic growth in Africa is the strongest globally, and Africa will have the biggest workforce globally 20, 30 years from now, and we're seeing consumer spend just grow annually. So we have a number of interesting companies in the portfolio. We try and access or get exposure to the more attractively valued. Some of the consumer names within Africa have done particularly well, and in our view look more expensive. But we have a range of different companies, be they retailers, be they food producers, be they brewers, and again, earnings growth between 15-20% and above, and consistent, very high margins, and per capita consumption of their products is just growing on an annual basis.
Now, Joseph, who do you find is interested in an Africa fund? I know lots of South African fund managers have not got big exposure to Africa simply because 75 or 80% of their assets are already in Africa. Are overseas people interested? Are you finding quite a lot of guys coming in from London and New York and actually buying into Africa funds?
As we've been discussing, the Africa story is gaining traction. There's a lot more awareness of Africa, and I think there's a lot more comfort with what are perceived risks versus real risks. We're seeing a lot of interest in the fund, not just local interest, but increasingly international interest, and that's obviously very pleasing for us. So I think what's happening is there's the awareness around Africa, the awareness around the diversification that African exposure can bring to a portfolio. We've seen Africa be less correlated with emerging and developed markets over the last year, and that's the attraction of Africa. It's a combination of bringing diversification to a portfolio combined with a lot of these very attractive characteristics such as growth and valuation.